Hello and welcome to the latest edition of The Exchange, brought to you by the New York Stock Exchange. I'm Douglas Jonas, your host. As a reminder, today's interview is for informational purposes only. The NYSE does not recommend investments or investment strategies. I am live on the floor with Cullen Roche. Cullen is the founder and CIO of Discipline Funds. Cullen, thanks for being with us.
Hey, Doug. Thank you for having me.
So let's start off. What is the Discipline Fund and why did you launch it?
Yeah, so the Discipline Fund is a fund of funds that does, the goal is to do exactly what its name implies, is to imply some discipline in investors and help them build a diversified portfolio that is behaviorally appropriate for them, that will help them stay the course. And we thought that this was a particularly good time. It's funny, I'm staring at the GameStop pit over here, and during this crazy time where so many undisciplined things are happening, we felt like this was a great time to bring it to market.
Now, all wrapped in an ETF listed here at the New York Stock Exchange. Cullen, tell us a little bit about what's bundled up. What are the assets underneath of the wrapper?
Yeah, so it's a fund of funds, and we made this thing hugely diverse. It's 10,000 plus global stocks and bonds, very high quality domestic bonds. And the kicker with this fund is that it rebalances in a counter-cyclical manner. So the actual balance of the stocks versus the bonds will alter over time depending on what the market dynamics are doing.
Yeah, stay on that topic for a bit, this idea of a counter-cyclical balance. What exactly does that mean?
Yeah, it sounds like a lot, but really it's a pretty simple premise. So your typical index fund, let's take, for example, a 60-40 stock bond fund. When it grows, the stocks typically outperform the bonds. It grows to 70-30, let's say, and it rebalances back to 60-40. The Discipline Fund is a bit different in that the algorithm will actually try to quantify what the risk is of, let's say, the 60% piece, and rather than just systematically rebalance back to 60, it might quantify that, say the 60 is riskier than it is on average. It might rebalance to, say, 50-50. So it's a bit more dynamic, but within a band of, say, 70-30 to 30-70.
So when you think about this ETF, who's the right end investor for this?
Yeah, well, I mean, it depends, but in general, it's for people that are very behaviorally aware of their own behavioral biases, people that are looking for the tax efficiency of the fund-to-fund structure with a single ETF, and people that are just looking for something that's a core holding with a solid amount of really broad diversification. So virtually anybody.
And if an investor wants to learn more about the ETF, where should they go?
So disciplinefunds.com is the website. The ticker is DSCF, and we're listed here at the New York Stock Exchange.
DSCF. Thank you so much, Cullen. For those that caught this episode live, we have a large amount of ETF educational material on our website, homeofetfs.com. That is homeofetfs.com, brought to you by the New York Stock Exchange, the home of ETFs.